Hi, it's Sheila Cohoon here today, and today I am here with Zamaan Jaffri, and he's with Premier Financial and Home Services, correct?
Premier Home and Finance. Premier Home and
Premier Home and
Finance.
Finance. So today we're going to be talking about assumable mortgages, and the reason that I wanted to talk with Zaman is because I had a situation where my seller had an assumable mortgage. He had a VA mortgage, and I had a lot of questions, and Zaman was very educated about it. And I thought, what better person to explain assumable mortgages to everyone than Zaman when he was explaining them to me? So, without further ado, Zaman, share just a little bit about you and the your situation with mortgages.
Yeah, for sure. So, just a little bit of background on me. I've been in the mortgage industry for going on 4.5 years now. I started originally working with a wholesale lender, ended up being the number one wholesale lender currently in the country. And then from there, I basically saw what the brokers were doing after coaching and training them on growing their business. And I decided, why not just do this for myself? So, ended up going on the loan officer side of things. I work with a really good friend of mine. And so all of our stuff is basically focused on first-time home buyers, real estate investors, especially newer investors that are just starting to get their feet wet. And then even if you're seasoned as well. So there's a lot of different nuances and aspects that we cover. And then also being a broker is really nice because it gives us access to multiple lenders, and not being tied to one lender gives us all this access to all these products. And then through that, we're really truly able to service our community. And that was one of the reasons why I honestly liked it.
Awesome.
So
Thank you so
here
much
we
for
are.
sharing. All right, so let's get into it. Everybody's wanting to know about assumable mortgage, so let's get into it right now. So I'm with Remax First, and Zaman is with Premier Home and Finance.
Hmm.
And here we go. So, what we're going to talk about are these bullet points: what is assumable mortgage, benefits for buyers and sellers, because there, there's benefits for both. It's a good thing. Comparing the loan options, and then why consider an assumable mortgage. So, from this point, I'm going to let Zaman just carry it away.
Yeah, perfect. So why an assumable mortgage? So just going back to the whole thing, a lot of things that are out there. One, not many people know about an assumable mortgage, and then two, a lot of people that do know what little is out there about the assumable mortgage just assume that it is for a buyer's benefit. But I love that you touched on that point. It is also for a seller's benefit. So just as an overview, we're going to start just understanding what an assumable is. And so, long story short, you basically are taking over a seller's mortgage. So you assume their current loan balance, you're going to assume their current rate, you're going to assume their current monthly payment, albeit taxes and insurance, whatever that may be for you. So all those things considered, that's one way that a lot of buyers can enter into the market. And it's an easy way also for sellers to be able to sell their property because it makes it a little bit more advertisable, and then it opens it up to a larger pool of buyers. So combining those two benefits, it's really advantageous. Honestly, at the end of the day, I think it's a really good program for a specific time period. And so we're going to touch on that. If you want to go to the next slide there for me, please. Perfect. So benefits for the buyers, the biggest thing is assuming a lower interest rate. So how do we assume a lower interest rate? So as we're currently aware of the market, our interest rates are fluctuating quite rapidly. If we know back 3-4 years ago, we saw the interest rates were in the twos, threes, and everybody was, scooping up the houses and all that stuff. Now we're looking at the interest rates that are twice that much. We're looking at the sixes, we're looking at the sevens. And for a lot of first time buyers, newer buyers, or even buyers that are just trying to move, these rates are starting to creep up. And that's really putting a bit of fear in the buyer's market. So it's really preventing people who would normally want to be able to move or afford the movability if they could afford the monthly payment are now not able to. So an assumable is a great option. The reason being is because the sellers on this end, they have this property, whether they financed it at a 3% or whatever the rate may be at this low rate. Now, the benefit of that is the buyer is able to take on that mortgage rate, take on that lower payment. So, that's the benefit right there for both buyer and then also on the seller side because it opens up a lot of options for the buyers to enter in. So kind of a win-win situation there. So now along with that, not only do you able to assume the lower interest rate, the other benefit of it too is lower closing costs. So with a traditional mortgage, you're going to run into quite a few different closing costs. You know, you're going to have your title fees, you're going to have your prepaid taxes, your prepaid insurance for your escrow. You're going to have your lender fees with your origination and underwriting, and you know these fees go on. Long story short, it could be anywhere between 2%, 3% of whatever the loan amount would be normally. Now, with an assumable, you don't have to worry about a lot of those fees. It's usually a very simple underwrite fee and then a couple other things as far as title and a couple doc fees. So it's really significantly less on the closing cost as far as upfront. The other benefit is, along with the lower closing cost, that little bit of information, they don't need all the other documents that they would normally need with a traditional mortgage. So buyers that may not qualify with a traditional mortgage because they don't have the documents or the qualifications to meet at that for a standard conventional loan or FHA, this is a potential option for them. And then there's different types of assumable too, whether we're talking simple or whether we're talking a full assumable, and we'll go into more detail on that side of things. So I'd like to touch on the seller side of things too, but before we go to there, Sheila, any questions, anything that we're going through with the buyer side? I know as a realtor, you're in contact with buyers on the daily. So what have you been seeing out there lately?
So a couple of questions that I've had on the buy side is does the buyer assume the years left on the mortgage, right? Which I didn't quite think about when I was going through this process, but it makes sense. So can you touch on that?
Correct. Yes. So with the assumable mortgage, you're assuming literally every single thing about the mortgage. So the rate, the term, the current payment, all of that stuff will be assumable. You're essentially just picking up where the seller left off. You're essentially taking the place of the seller. So rather than actually purchasing the house, you're just assuming it. Now, there are certain instances of what we can assume because not every mortgage is assumable. There are certain stipulations on it. So, you know, most conventional mortgages, they're not going to be assumable. But if we're looking at most FHA, VA government mortgages, those loans will be assumable, and we'll touch more into that too as well. But yeah, going to your question about the term, 100%, yeah, everything is assumable as far as that.
And then with it being an FHA or a VA mortgage that are only assumable mortgages, if let's say it's a VA, do they have to be a veteran in order to assume that mortgage?
I'm really glad that you actually brought that question up. So this is a really, really great loophole for a lot of buyers. And so touching on that, especially for first-time buyers, you know, take advantage of this, especially if you have family, friends, or you know somebody that's a veteran that's possibly selling a house. Assumable, you do not have to be a veteran to assume a VA loan. So a non-veteran can technically get a VA loan through the assumable process. Now, obviously, the original owner is VA and that their military service, that's how they obviously got the original VA loan. So this is a really big possibility. And, you know, benefits that come with the VA loan. When they finance the loan, they finance it to that you would have to pay back. So on the closing costs were for an assumable mortgage, we were talking about having lower the assumable mortgage, along with the standard fees that are there with the typical processing side of things, the down payment, right? So with most traditional conventional products, you're looking anywhere between 3% to 5%, depending whether or not you get down payment assistance. There's a lot of variables there. However, with an assumable, if you find a house, let's say, for example, that someone purchased for 150,000 about a year ago, and then they've only paid off, say, 5,000 in principal balance. Well, you're not looking to come 3, 4, 5% of that. No, you just have to come with the remaining balance of what they have already paid off between when they originally financed it to what they have currently on there. That's paid back to the seller. And then after that, you just have your minimal closing costs. So that's how there's a lot of limiting side of things with cost. And then on top of that, you can also assume a VA loan. You can go ahead and assume an FHA loan. So quite a few benefits that are on there where maybe a borrower might not qualify normally on their own.
Right. No, I think that's great. And then you touched on it a little bit. So, and this really kind of made me understand a little bit why my particular situation with my seller, it didn't work out so much. Um, so he's been in the house, or were in the house, I think, for 8 years.
Hmm.
So they had quite a bit of equity in that house, and from the price that they bought it for to the price that we would be selling it for, and then how much they've paid off on their mortgage, there was going to be like 150,000 or $130,000 that was additional cash that they would have needed to bring to the table. So, in general, I feel like people like the assumable mortgage is in 90% of the cases better for people who maybe in the last couple years they bought a house and now they're struggling to pay for it for whatever reason, financial inflation, whatever. They're struggling to pay for it and they have a VA or an FHA, and so now they can present when they're selling it that assumable mortgage side. Is that correct?
Yes. So I'm glad that you actually touched on that in the market side of things, because in a couple of the future slides, and we're touching on it again, that's a really big point. And, with like we were talking about how the rates were super low 3, 4 years ago, where we had twos, the threes. And like you're saying, with people buying the house there, one big thing is the average person stays in a house maybe 5 to 7 years or so, give or take. So a lot of people are already going to move because they may have bought their first home at that time, and then now they're going to upgrade, they're starting a family, whatever the reason. So you'll have motivated sellers on that end of things. And like you're saying, people might have gotten a little trigger happy, so they decided to go buy a house, realize that they didn't want to have that type of house, and so now they're looking to sell it or move it. There's all kinds of circumstances. So in that side of things, there's always going to be the availability. But the beauty of it, especially with these last 3 or 4 years, is that this was only 3 or 4 years ago, and the rates were just that low. So the chances of most people paying off all that equity in that 3 or 4 years is not going to be really too high. Now, granted, someone decided to put 20% down. Yes, okay, now you're reimbursing them their 20% down.
Right.
However, there were a lot of people that took advantage of first-time homebuyer programs. There were a lot of incentives that were offered at that time. So, as a
Yep.
loan officer too, I go vouch for it. A lot of the buyers that I've worked with in that time period were first-time buyers that did not put a lot down. They were coming 3% down. They were even getting down payment assistance that would cover some of that too, even. So now they're even having less equity. So there is a really big benefit, but it is finding, a bundle of needles in a haystack, if you will. So it's not
Yep.
impossible, but it is a niche thing that you have to find, and it takes a little searching. But that's, where you and I come in. We're the experts. We do a little bit of the research for them, so they don't have to go digging through it all.
Exactly.
So
And anybody who's watching this who is an agent, make sure that you go and you get the assumable mortgage package before you list the house. Get that all taken care of, and because you're going to need to have that a bit available for the buyers. So just FYI. All right, let's carry on
correct.
to the next slide.
Okay, perfect. So, I know what we touched on with the benefits for the buyers, and we were talking about how, the time frame for when they should buy it with, who they should be looking for, what type of sellers, and, what's available to them and that side of things. But there are a lot of benefits to the seller side of things as well. So one of the big ones is attracting more buyers. So like we talked about, not a lot of buyers may originally qualify for a standard traditional conventional FHA, or even they're not a non-veteran, like we talked about qualifying for a VA loan and those types of benefits. But what they can do is by having this mortgage themselves or this type of opportunity, they're able to open this up to a larger pool of buyers. Now, by opening it up to a larger pool of buyers, as Sheila, with the more buyers means higher prices for bidding. Sellers are going to probably be able to sell their property for a little bit higher if possible. So that's one big thing. And the other thing is the quicker sale process, because we're not going through all the documents and stuff for the buyer to take over. It's not going to be as much of a stringent requirement, as much of a time consuming process. So not only does it make it easier as far as communication, as far as document gathering for both buyer and seller, it makes it a little bit more of a seamless transition. And then the other thing too is the opportunity to attract them with financing terms, right? So there's a lot of other creative financing. let's say they can't do the assumable side of things. Well, there's still other options for them to do financing, seller financing, or, you know, maybe a land contract or whatever may be opportune for that moment for them to be able to get their situation figured out. So, you know, like we were talking about with the time frame that we're in, with the rates being currently where they are, I would say we're in a pretty good spot overall, you know, for an assumable mortgage. And if we want to go over to the next slide, we can talk a little bit about, you know, the different types of loan options and really the difference right there. So, you know, not only are we just assuming the current, you know, as a buyer benefit, the seller's current term. So, you know, they're getting a lower term. You're not signing a 30-year mortgage. You're signing maybe a 27-year mortgage or a 28-year mortgage. You're also inheriting their rate. So instead of getting a 6.5 or a 7 right now, and then having to buy the rate down and then do a, you know, thousands more there, or then do a refi later and then pay again there, you're already getting a house with equity in it. And then on top of that, you're also not having to come with that higher rate. So your monthly payment's going to be significantly lower. You know, you're talking on a $200,000-$300,000 house. That's a couple $100 a month. That adds up over the years. So that coupled up with, you know, the rising interest rate environment that we're in right now, the assumable side of things as far as benefit to the buyer, I would say this is really a big key point because there is a caution to also take to it, right? So like any benefit, it's a double-edged sword. So in this case of things, one of the big benefits is lower rate, but not everybody has a lower rate. Someone may have a higher rate. Someone may have terms that are not favorable in that sense of things. So that's really where it comes on to us to do our due diligence. That's where we rely on our professionals. So that's where you come to us, you know, whether it's Sheila, whether it's me, ask these questions. Questions are free, right? So just like how we're doing this presentation right now, that's a really big thing that is out there. It's really just asking the questions and then finding the good deals. And then comparing it to traditional loans, right? We were talking about the more stringent requirements. Conventional loans, you know, 50% debt to income ratio. You're going to have specific income requirements. You're going to have to be able to meet specific credit requirements. If you're assuming a VA or an FHA loan, then you're assuming different types of requirements in that sense of things. And a lot of those types of loans are going to be a lot easier to qualify for. And then on top of that, we talked about the closing costs. So less on the lender fees, less on this and less on that. All these things add up. So if you want this flexibility, if you want this type of advantage, take a little bit of effort, you know, look for it. But this is a really advantageous time period, I would say, at least in this next year, 2 years, to take advantage of these types of programs. So it's
I agree.
really, you know.
Yeah, I agree. In fact, the one that we were trying to offer to our particular clients with the house that I was selling, he had a 4% rate, and so but the unfortunate part with his is it was such a long time that there weren't many people that were able to bring to the table that extra amount of money, so it just didn't work out for him. But in general, I think like you said, over the last couple of years, people have had really good rates, especially between 2021 and 2022. They had those good rates even 2020. So getting that assumable mortgage at those rates right now, I mean, it's like gold, right?
Yeah. Yep. 100%. Yeah. Less requirements, less cost up front, lower rate. You know, this is just ideal for a lot of people. Right now, this is what people are looking for as far as temporary buy downs. They're using seller concessions. They're trying to negotiate with, you know, other types of aspects. We'll do appraisal waivers and stuff like that. Like there's a lot of different things that they're trying to offset these costs with. And, you know, a lot of stuff of it, it's not even, you know, just straight down payment assistance. Some of it's, you know, getting a second lien and then financing your down payment. And instead of having to go through all these hassles, all these extra programs that you have to go through, you know, just do the assumable mortgage. And now you're basically getting all the benefits that everybody is fighting for on every single deal that's out there. And you can just walk into something a little bit easier right offhand. And then
So
on top of that, lower term too. So
yeah, exactly. 2 questions.
Mhm.
One, so on a VA, well, actually, it doesn't apply to this one because it may or may not apply. So in this particular situation, the veteran was completely disabled. He wasn't paying the taxes on the house.
Mhm.
So when the new person assumes that mortgage, they will have to assume those new taxes at that new sale price. Is that correct?
That is a really great question, actually. So this one is something that I would really actually highly advise getting in touch with the title person for. So in this regards, it's really going to depend on whether tax is owed or not. Now, yes, typically, and a standard thing, if you're going to buy it, you should be aware of what the tax situation is. If you decide to
Sure.
move forward, then, we have to accept it. And it's likely going to be the similar case here. However, there is it's going to really kind of depend on how they're going to assess it, and it's going to vary with every city. It's not necessarily going to be assessed over what their current loan amount is versus what the property is. And that's actually one thing I forgot to touch on also with one part of the transaction is the appraisal, right? So every mortgage right now, if you go for a traditional mortgage, 9 times out of 10, you're going to need an appraisal unless you're putting a significant amount down. And
Right.
so these appraisals, obviously, that's going to determine the value. These come in higher. But with an assumable, you don't have to do an appraisal. They just go off of what was sold and then what they have currently owed on it. And then whatever that balance is, pay the seller, pay us our costs, and then you're moving on with your loan. So that's the other benefit of things. So we may not know the current value offhand of the property unless we obviously go get the appraisal done ourselves. But the city, they're really good about knowing what our millage rates are and what they decide to charge us for taxes every year. So
Uh-huh.
I'm sure we'll get the bill in the mail and they'll tell us, no doubt.
Right. So, last question, before we go to the next slide. So
Yeah.
can a buyer get concessions? I mean, I know they're already getting a great deal by getting an assumable mortgage, but can they also ask for concessions as well?
That's actually a really great question. For concessions, I would have to double check with the current lender because it's not technically a purchase. We're just assuming the mortgage. So
Makes sense.
in regards to that, the seller could technically work out a transactional deal or where we can sell it for less or work it out that way. But for in the traditional sense of seller concessions, I would say I would have to get back with you 100% on it. But I would say in the traditional sense, not in that sense, since it's not actually a
Right.
purchase. It's
That
more of
that
just the
makes sense.
transference.
They may
Yeah.
want to just lower the price for, I mean, it would
Yeah.
be
I
like
mean, you
you
could
said.
just
Yeah.
take less. Yeah. If they wanted to
Yeah.
take less. So.
All right. Let's go on to the next slide and go ahead.
Yeah, so I mean, it's basically just recapping everything that we discussed. So really, just why are we considering the assumable mortgage side of things, and really we talked about the advantageous side of things. We talked about the long-term financial planning benefits. So a lot of these things offer stability. A lot of this offers the cost savings. So I always talk about going into a property, especially if you're a first-time buyer. Don't go into a property and become house poor. The last thing we want to do is end up with a mortgage payment that we are well not equipped for. Because at the end of the day, and I'm not sure if every other loan officer wants to say this because at the end of the day, I would love to get you a higher loan amount. I would love to get you the highest mortgage that you could afford. That'd be great. It makes everybody happy. But the realistic part of things is just because you qualify for something does not mean that we should go for it necessarily because we don't see what your personal expenses are. I don't know what your personal finances are. I don't know what you decide to spend things on, both for your requirements, for your fund, for whatever. Who knows? So at the end of the day, that's your diligence right there. So just make sure that you're aware and when you are shopping for whatever type of mortgage, whether it's a traditional mortgage, whether it's an assumable mortgage, be aware of what your budget is and then go into that. And then this option of a product is a really great opportunity because it does give you a little bit more buying power. So let's say your budget is a $1,400 mortgage payment. Well, right now in today's market, $1,400 is probably going to give you roughly, depending on taxes and insurance in the area, I'll just give it off of Michigan and Metro Detroit. You're probably going to be looking at about 140,000. So maybe a little bit more than that, 145,000. Now, if you look back a few years ago, that's talking about another 10,000 difference. And the reason is just because the rate is significantly lower. That $100, $200 in lower payment makes a big difference in what your overall cost is. So now if you have 100, 200 less in payment, you can afford a higher home to raise that payment, right? So you can fill it in. So win-win all around. You can buy a
Right.
bigger home than what you were expecting. You can also come in with a lower cost and you get a lower rate. The seller gets reimbursed for what they want to get, and it's a seamless, easy transaction. And honestly, it's just a win-win all around. I mean, I don't think anybody can really lose as long as you do your research thoroughly. Just make sure that the rate is right. Just make sure the balance is right. Make sure you know what you owe. That is the number one thing. And then I'd say you'd really be successful from there. So consider it. Do your
Yeah,
research.
I
And then
think
if you, yeah,
I think that's great information up front. And if I had to give anybody a suggestion, make sure you get everything done up front. You really want to make
100%.
sure that you understand everything, you're super educated about it, and ready to go when the buyers start knocking on the door, because you don't want to be behind the eight ball when you're trying to get this house sold. So,
Yes, I
one last
agree.
question.
Yep.
One
Mhm.
last question. So, on our particular assumption, they said anywhere between 45 and 90 days to get this through to the closing table. Is that a normal time frame for assumable mortgages?
Great question, actually. So on the time frame side, it is going to be lender specific. And so I can say, just being a broker, I'm exposed to all these other lenders. There are some lenders that are definitely 100% quicker than others, and then some not so much for whatever reason they may be with their process. I've seen some assumables be done in less than 2 weeks, so even faster than some purchases. I've seen some done faster than a cash purchase, which is really, pretty intense, and everybody's really excited with that. But then I've seen on the other side of things, and I'm not gonna, sugarcoat it at the end of the day. I've seen some take 4 months, but it just depends on the borrower's qualifications. It's gonna depend on the lender that they're going through, and that's really where it comes down to making sure that if you don't know offhand yourself, make sure you have the right professional backing you in the corner. I would highly recommend doing your research on that, shop around, especially what not just your big box lenders, but look at your local people in the area, look at your realtors, look at your local mortgage brokers, ask people around, ask your friends, ask your family, and take the opinions of a few different people. Don't just take one, take a few different people, two or three. And that's really how you're going to come up with the proper decision making process of what's the right way to go about it.
But on the assumable mortgage side, they have to, if they're going to um, sign up to try and get this assumable mortgage, they have to
Mhm.
go through the mortgage company where that particular mortgage is through. That's correct?
Correct. Yep, you're
Okay.
taking over the entire mortgage. Yep. So you're going to assume the same servicer, you're going to assume the same loan, the same terms.
Okay.
The best way to put it is everything stays the same. The only change is the person paying the bill. That is it. Oh, and actually touching on that point, because I'm actually glad that you brought that up, the difference between a simple assumable and a full assumable. So
Yes.
there are
Yes.
different, so there's different lenders that are out there. So some lenders will offer what they call a simple assumable, and this is a really quick transfer. If you just want to get the job done, you're in a hurry to get your house sold, you're in a hurry to get moved in, and the seller is okay with this. A simple assumable basically keeps everything the same. The seller still holds title, holds deed, holds the mortgage liability, holds everything. And similar to how a credit card you can add an authorized user to, you essentially become accessible for paying the debt of that mortgage. So in all theory, the seller still holds all the liability, still holds everything there, but you pay the bill in that assumable and you are on that mortgage. So the other side of things is the full assumable, which is essentially removing the seller entirely and then you taking the seller's place.
Perfect. I think we
Yeah.
I think we pretty much covered everything. And if anybody has any questions about any of this, we're gonna show you our information so that way you can contact either one of us. I'm on the real estate side, remember, and Zamaan is on the mortgage side. So if you have any questions, feel free to reach out to us by either of those phone numbers. I am going to put the links in the description, so make sure you check that out. And any last parting thoughts?
The last parting thoughts that I have, is not even really mortgage related. It's not really anything related. Take it this is life advice. Just do your research, educate yourself, Yeah, I can't stress enough how much knowledge will make the difference in your life. It is the difference between a successful decision and a successful outcome towards a unsuccessful, unwanted outcome. And so honestly, do the research. If you don't know how to do it yourself, find someone who knows how to do it. Questions are free. Ask, 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 learn, learn, learn. But that's it. Have a great time. Have a great day. I appreciate all of you taking the time to learn this. Like Sheila was saying, our contact info is on there, QR codes if you want to actually get some more details. All of our stuff is on there, and we appreciate you guys.
All right. Take care. Have a great day. Thanks, Zamaan.
You as well. I appreciate you, Sheila. Bye-bye.
All right.